Hey guys, this is Simon with toughtrader.com and Trade and Perform Coaching. I'm doing a review today. Very interesting. Someone had asked me, we had a trade plan in the room that we set up on, let's see, Tuesday going into Wednesday morning. And we were looking for a very specific setup. And someone asked me, well, hey, when you got the reversal on that setup, there was no pullback. How would you handle that entry? So I'm going to discuss what the trade plan was, which if you'll go to Wednesday morning's market preview, which is in the YouTube channel, right? You can watch what the trade plan was. So it was set up beforehand. That entry did not come up until the European session the following evening. But I want to go through the setup and lay out exactly what that looked like for everyone. So before we get started, important disclaimer, past performance is not indicative of future results. Number two, right? This is for educational purposes only, right? Number three, you can lose a lot of money trading futures. I do not, by any means, try to make out a get-rich scheme. I do present a business plan in which there's gains and losses, as there is in any business. And you can, and if you are trading not to lose any money, it's a very difficult way to make money. Instead, I encourage people to integrate losing as part of their business plan. It's normal. There's nothing outrageous about it. This is not a casino and it's not a get rich scheme. It's a business, and we're looking for the highest odds entries on a consistent basis and how to get paid out of that process. So please, please, please do not blow up. If you're losing money consistently, stop. Find someone who can help you. Do not lose all your capital. There's no glory in blowing up. Can't stress that anymore. Okay, let's get started. So the trade plan was really quite simple and forward. When we look at this profile, what this generated on a TPO, one of the things was we look for patterns that will repeat over and over and over again. So this is NQ. We're really looking for ES. Let me find it really quickly. There we go. And on the ES profile, let's erase all the lines here. On the ES profile, so this was Tuesday, right? We clearly had what's called a P-shaped profile. That's a short covering profile. And when you look at short covering profiles, they very rarely just simply form a P-shaped profile, reverse, and then get below the low. If we do get below the low, the it's generally broken, but it's pretty rare. What you usually see is a period of consolidation over the next couple of days where we simply trade sideways, much like what we had on Monday, Tuesday, Wednesday, right? We really didn't advance very much. We really didn't fall apart very much. Now, the target on this, I'm going to switch back to the other chart. The idea was on this Tuesday was to get a retrace. And normally I wouldn't say this. Normally we're leery of the 62 retrace. But the thinking here was that if we could get behind this 50-60 retrace, that would be enough to shake out late hands that chase the rally up on Tuesday and Wednesday. It would shake those people out, and that would give us the juice we needed to break to the upside. It came during the European session, so I'm going to show you what that looked like during the European session. And there's two ways to handle this retrace. So remember, when that trade plan came out, all we saw was this, right? The idea was to ignore the 50-60 retrace. Again, we're looking for the bigger swing here is what the objective was. There's nothing wrong in trading out of the 50-60. It clearly worked on Wednesday, but the objective was to get behind that 50-60 for the bigger swing, right? So there's two ways to handle this before I show you what the price action looked like. I can come in and decide to trade behind in this area here, and simply as soon as we close behind the 62 retrace, start loading into the trade. My stop would be approximately 2 points behind the low, right? So realize that puts me from 93 to 89. Let's just round up numbers just for sake of conversation. That's 4 points, right? If I add 2 more points, that means I have 6 points of risk that I'm going to work it in. And I have two ways of entering. I can either wait till I get above the last seller, or I can fade in. I usually try to do a combination of both. I take anywhere from a quarter to a third and enter on the first close behind the 62 retrace. I'll enter another third near the low down here, and then the last third will come depending, and this is random, I don't know where it'll show up. Then the last third or the last quarter, depending on how I'm doing it, I'll enter when I get the reversal signal, right? So those are three clear, distinct ways of entering. Now, you can choose as an individual trader, you can go, hey, I'm only going to enter after my reversal signal, right? Some traders like to go, I want to see the reversal and then a pullback. The risk there is that you get the reversal without any kind of pullback to get into the trade, right? And some traders go, hey, I'm perfectly fine fading back in. And the one area I would have targeted on this was would have been the retest of the opening print here off the TPO, which would have been 25.90 and a quarter, right? So if we come back and come to the other chart, so this is a TPO chart. This is a chart by time, and I'm going to put 25.90 and a quarter. And if I had to target one place, it would have been the 25.90 and a quarter. Why am I targeting this? Well, first of all, we're in a bull market, right? In a bear market, this doesn't work out. It just fails, right? Secondly, I'm looking for the size of the rotation from 2600 to 2590 is a 10-point rotation. 10-point rotations are key to me in my trading of the S&P 500. I want to say that again. 10-point rotations are key to my trade plan. And now the last part that I want to do is I don't want to go, before I got in here, what I would say is I do not want to simply willy-nilly guess this. So my trade plan would have been like this. And just so you know, I don't trade the European session. I'm a day trader only. I only trade on the day time frame. I don't enter during the European session, but I have members in the room who do. So this is how I would have handled it. I would have entered my first trade would have been on a close behind here on a 5-minute bar, right? Or 10-minute bar, whatever your time frame is. My next, that would have been 1/3. My next entry would have been here at the back of this area, right? That would have been 2/3, and my last entry would have been wherever wherever the reversal bar kicked in. That would have been my last entry. Then my stop would either be 2 points behind or the swing low. It doesn't matter how you do this. I want to be clear. It doesn't matter if you say I'm just entering the whole trade here, I'm entering the whole trade here, or I'm entering on a reversal bar. What does matter is that you know over time which entry method A aligns with your risk principles. Let me cover that for a second before I show you the PA. If you say, hey, look, this is a 6-point stop, but I know financially all I can mentally handle is a 3-point stop, $150 a contract, right? Then entering here would be a bad idea because you're going to have to allow it to drag all the way back to the back of this trade. What I see some inexperienced traders trying to do is go, I'll enter here and I hope a 3-point trade helps me out. It gets stopped for a 3-point stop, and then they watch the trade work out perfectly, right? The way I prefer to handle that is to take the trade and go, okay, I can only afford 3 points. My stop's going to be 2 points below the low of this bar, 25.89 and a quarter. So the way I need that trade to work, is I need it to come to, I take 89 and a quarter. I need 2 points behind that. It puts me 79 and a quarter. I'm going to have to limit, right? 89, forget the math, 89, 88, 87 and a quarter, right? So I'm going to need it to come right to 89 and a quarter in order to be able to use my 3 points. Or the last choice is on my reversal bar, right? I'm going to hope that reversal bar from the time it reverses to the low tick is less than 3 points. And that's what I need in order to make the trade work, right? Those are the 3 aspects of entering the trade, right? Now, what I'd prefer is if you had enough capital, is that you're simply spreading your risk and bringing your average cost further and further back as it pulls back. If it just dips in and pushes out, you have a portion of the trade on the table, and you can come up and get paid as it pushes out of this location. Or choice number two, is you're simply fine with going, if you can trade more size, but you absolutely want to pinpoint your location. What you have to do in your trade plan is simply say, if it hits my location, I'm not willing to put more than X points of risk on. It has to get here in order for me to take the trade, or I'm perfectly fine missing that trade, right? It just simply, that's all you have to, I can't stress this enough. That's all you have to decide, is that your trade plan and your risk plan is more important than what the market is flashing in front of you. That's trading, goes back to trading structure plus trading your trade plan versus trading the market and all the noise and stimulation that it gives you. So let's go see what it looked like overnight. We're going to pop in the overnight. So notice it took a little bit of patience. Let's cut this down a little bit. There we go. Took a little bit of patience. So what you'll see is this was our rally day, right? This is Tuesday where we close out business over here. The idea was to get a close behind 25.93 and have it push. And then as long as it held the low over here, right? Stop 2 points behind. I wanted to get long. So how would I handle that? Well, if I push over, what you will see is I had an initial push behind. Notice it did not close behind the 62 retrace, and that's where I wanted to get long. It closes behind the 62 retrace. So this may be where I stick my toe in right here at 25.93 with 1/3 size, right? The next, where did I say I wanted the trade? So now I have a foothold on this trade. Notice that takes place in early Asia, right? If we look now coming into London Open, which is right here at 2 in the morning, you can see that we roll down and right into London Open, we push right into 25.90 and a quarter to 25.89 and a quarter. There's my second third of my trade, right? So now I have an average cost of about, let's call it 25.92 for sake of conversation, right? And then my last piece, for those who are waiting for the reversal, and this is the most optimal for, I think, for a small trading account because it lets the market tell you where the stop is. You could have simply come in on the close of this bar right here, 25.92. Your stop would have been 25.89 and a quarter. That fits within your 3-point stop if that's what you need. That's a totally random number. I just see a lot of people going, I'm comfortable with 3-point stops. For me, I just put the stop that the market requires and adjust the trade size appropriately, right? So here's your last entry. This takes place right at London Open. If you would have entered at 25.92 and a quarter, it doesn't matter which way you would have looked at this trade. Your risk from 25.92 and a quarter was back down to 25.89 and a quarter, right? So you just put a stop 1 or 2 ticks below. And what did the RR end up giving you? Well, if you look, that ended up giving you a swing low. And again, this trade, remember, this trade wasn't made up afterwards. If you'll go look at Wednesday morning, right? This is the exact trade that I laid out and exactly how I laid it out in the room. I said, I want to get behind 25.9350 for the long, and the shot was back up to the high, 25.98 and a quarter. So even from this point, if you could have waited all the way through, took the first entry right here at 25.92, you still had 6 points. That's $300 a contract, pretty much in a straight line, or you could have faded in. Both methods work. The important part here is not that the trade worked. The important part is that you, A, identified where you wanted to take risk, B, what that risk was going to entail, how much dollars per contract, and C, that we were going to be able to get a one-to-one risk reward out of this trade. So the what is, how do I get long after a big day up like this, right? How do I get long? First of all, you go look at the chart and go, oh, where are we most likely to shake people out? Well, we're most likely to shake people out behind 25.9350. Where would be the ideal location? Well, from a risk perspective, right at the bottom of the beginning of this rally would be ideal. I'm not sure we can get there. So I'm going to have to make a decision as to whether I want to enter at the break of 93.50 or I want to wait to see if I can get them all the way back to 20.90 and a quarter. And the last piece, do I have to buy when it's coming down in a straight line like this? You don't. And I always preach this in the room consistently. You can wait until you clearly get above your last seller, right? And if you'll look all the way through this line beginning about midnight Central Time, all the way down to right at 2 in the morning, just past 2 a.m., we clearly get above our last set of sellers on this bar. Could have entered right here for a clear long side trade, and that gave you a great one-to-one or better risk reward. Okay, so notice that wasn't fast, it wasn't erratic. You didn't have to feel like you were slave to the market. You could have simply said, that's where I want my risk. Let's see if the market comes back for me. And it's a much calmer, focused way of trading without feeling panicked or frantic. And the market gives you that opportunity consistently, right? You just can't be afraid of missing the move because it's a never-ending train of trading opportunities, right? You simply have to identify what you want it to look like, what it needs to look like to fit your model, and repeat that model constantly, knowing some of the trades will be losers. And hopefully you have a high win rate. I think I average around 70% most of the time. And so I get a one-to-one with a high win rate. You don't need the high win rate with the one-to-one, by the way, if you exceed one-to-one. But if you do have the high win rate and you have the one-to-one, you know that your losers will get absorbed. The last piece is you let go of control of the market and let the market do the work for you. Anyways, my name is Simon. I'm with toughtrader.com. If you'd like to come visit us in the room, you can email me at tradeandperform, TRADENPERFORM @gmail.com. I'm happy to extend a 5-day visit into the room. I hope this helped. If you have any questions, please email me. Even if you're not a member of the room, you have a question about how the room works, more than happy to answer those questions. Hope everyone had a wonderful Thanksgiving. I'm looking forward to getting back to work on Monday. Have a good night, guys. Talk to you later.